Hi, my name is John Olsheimer, and I am a credit expert who contributes to creditcardinsider.com. Today's question is this: what factors other than credit cards have the largest impact on my credit scores? Excellent question. There's a lot of meat on this bone, so let's get through this quickly. There are 5 factors that influence your credit scores, and all 5 of those factors come directly from the information on your credit reports, because credit scores only consider information on the credit reports. Anything that is not on a credit report has absolutely no influence on your credit scores whatsoever. So here they are in order of importance. The number 1 factor in your credit score is going to be your payment history. This is going to be how well you pay your bills or how poorly you pay your bills. And essentially, this is the presence or lack thereof of information that is derogatory on your credit reports. And this is going to include whether you pay your credit cards on time, whether you pay your mortgage on time, your auto loan, or any other obligation that shows up on a credit report. Student loan is another example. This factor is going to account for roughly 35% of the points in your FICO and Vantage Score credit score. So this is the largest component of the pie of the points that go into your credit score. Number 2, and not far behind, is the debt load category, or your level of debt burden is another way of putting it. This is going to be worth roughly 30% of the points in your FICO and Vantage scores. And this particular category is going to capture a variety of metrics from your credit reports, including the number of accounts you have with balances and various usage ratios. So in other words, what is your balance relative to your limit on your credit card accounts, and what is your loan balance relative to the original loan amount on your installment loans. The third category is referred to as time in file, which is kind of a complicated way of saying the age of your credit reports. And there's really 2 metrics that are considered in this category, which incidentally is worth 15% of the points in your credit score. The first metric is going to be the age of your credit report. Now, don't get me wrong, this is not the age of the consumer. This is the age of the consumer's credit report. And that's calculated simply by looking at the oldest account on your credit file, looking at the date opened field of that particular account to set the date of birth of your credit report. The second metric from this category is the average age of the accounts. And so if you have 2 accounts, one is 5 years old and one is 2 years old, then you're going to have an average age of trade of 3.5 years. The older the average for your credit report, the better it's going to be in that particular category. The next category is the one that everybody loves to talk about and obsess over. It's the inquiry category. And this particular category is only worth about 10% of the points in your score, and it looks at the number of inquiries that you have on your credit report that are less than 1 year old. There's a complicated way that FICO and Vantage Score group similar types of inquiries together for various categories where consumers can shop for credit. Mortgage, auto, and student loans are all categories of loans where you can actually go out and shop different lenders and compare the types of rates and terms you're going to get. So their credit scoring systems are actually set up with logic that does not penalize you for being an aggressive rate shopper, as long as all of the inquiries from those types of industries are in a relatively short period of time. Last but not least is the diversity category. This again is worth 10% of the points in your score. The diversity category looks to see if you are managing a variety of different types of accounts, or if you were only a credit card user or only someone who's had a few loans. And obviously managing a credit card is very different than managing an auto loan, which is very different than managing a mortgage loan. So if you have different types of accounts on your credit reports, then you're showing the credit scoring systems that you have experience managing these different types of accounts, and your scores are going to benefit as a result. So those are the 5 categories that make up 100% of the points in your credit scores. If you have any other questions pertaining to credit or other financial topics, then please submit them to creditcardinsider.com. Thanks for watching and have a great day.